of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, we're going to do a little bit of swimming through FinViz. We're actually going to look at the different ETFs and stocks that have not really performed well this year compared to the other stocks within its sector. For example, we'll look at technology stocks. I mean, we'll see our Microsoft, our Apple, our Nvidia, etc. And then we'll also be able to see which ones have not performed well this year. And we can take a look at those and see if maybe we can anticipate a potential late bloomer or a late stock kind of turning up later this year, or maybe even getting started up next year. So we'll look there. We'll look at healthcare as well. And it will be a visual heat map. So it's going to be very easy to kind of see where the ETFs and individual stocks have not been performing. So we'll look at the stocks, we'll look at the charts, we'll look at the finances, and we're going to have fun. If you've been here before and you're not a subscriber yet, please consider doing so. It really helps me out. But without further ado, let's go ahead and jump in. All right, so you know where we are. We're on finviz.com, the world's greatest website. All right, so here is that heat map that I was talking to you about. I'm just going to shrink a little bit. I'll just go up here. So let's get everything in the picture right there. And can you guys see this? Barely. Okay, let me. There we go. CE. Yep. Okay. So we are going to look at the world. Not the world, I'm sorry, the full. This is the full on FinViz Elite. And let me just scroll down so you guys have the full picture. And we're going to look at the year-to-date performance. Year-to-date performance. We can see Microsoft has killed it at 41%, Apple 50%. That's awesome. You know, just across the board, you can see the best performing stocks are going to be the brightest green. So in technology, we can see down here, there's like a cluster of stocks that haven't really done well. We have DAVA. I just double clicked on DAVA because it is underperforming. It's currently pretty red. We have a bunch in here as well. Let's look at ZFOX. Let's see what else we can find. ACIW worldwide. Not sure what that is. Let's look at healthcare as a whole. Kind of has been not too strong. Johnson & Johnson for the year is down 1%. AbbVie down 6%. I really love AbbVie. Pfizer's down 30% this year. Organon, Amgen, a lot of really decent ones are just down for healthcare. Let's look at Organon. Also more healthcare plans. Again, healthcare is down this year. That might be a good one to consider going into next year. So let's look at our CVS. Let's look at Molina Health. Let's look there. Let's look at UNH. All right. And then we have conglomerates. Honeywell, that's a pretty well-known name. Let's look at that. Valmont Industries, let's look at that one as well. And banks, we're not going to look at banks. Utilities, I mean, they had a really good year last year, a couple years, I think. Energy, same goes for them. Looks like basic materials are doing well as a whole. We have international flavors and fragrances down 20% for the year. Let's look at that one. Agriculture for the year is down. FMC is down 22%. Let's take a look at that one. What is this? Chemicals will pass. Aluminum is down quite a bit. We'll look at aluminum. Why not? All right, so we've got a bunch of stocks. We'll then look at ETFs here soon, but let's look at DAVA. So DAVA, wow, was at 170-ish, and now it's down to 49.50-ish. Um, Looks like it is kind of turning around. Those sales are really good. They're already at 1 billion in sales so far this year. Let's do our quick calculation on DAVA. I just want to see what the price could be. So they bring in 1 billion, 10 million a year, it looks like. They have positive cash flow of 126,300,000. Yep. And their market cap is over 3 billion, so we're going to add it in here as well. So now let's add cash, remove debt. Balance sheet, they have 162 million in cash, which is all-time high, so plus 162,810,000. Total debt, they have 55,900,000. Is this USD? Oh, it's GBP. Dang it. GBP to USD. Okay, they're... Oh, our dollar is stronger. Okay. So we're going to go back up here really quick. We're going to redo. 1 billion, 10 million in sales plus income of 126,300,000 plus 3 billion, 20 million in market cap. 3 billion, 20 million. Okay. That's USD. So they have 162 point instead of millions. So 208,100,000. So plus 208,111,000. Total debt they have. DAVA total debt's 5590. So it's 71 million. So minus 71 million. 810,000. Perfect. Okay. Going back up to the shares float, which is 40 mil divided by 40 million, 150,000. $106 stock trading at $51. Not bad. Target price 71. Target price was a 185 before. Let's just go and see how things are doing. Cash is at all-time high. Good for them. Total debt is not as high as it was last year. That's good. Total liabilities 189. Total assets 628. So that's about a 3-to-1 assets dwarfing ratio, or assets dwarfing liabilities. That's really good. Revenue is just naturally going up. Cost of revenue also going up quite a bit. What's their gross margin? 33%. That's like a growth stock. Net income's good. It's growing in the right direction. Gross profit, organic, good. Quarterly. So there's 3 more quarters they're going to report on this year. Wow. I like this one. I can't believe that. It's been in accumulation mode for a little bit. Yeah, I think this is a good one long term. So we're gonna just note this one down. I like this one. Opening my little notepad. Maybe. Okay. Okay. Going on down, going on down. All right, so we have DAVA. Okay. Fair is 100 and what? 106. Current 53. So I'm going to want to watch for a reversal here. Institutions own 73%. Intel, this is going to be DAVA. I'm going to say they own more than 73% because this company is trading at a discount, in my opinion. Institutions own, okay, we got to do math. 41,849. So they own over 100%. If institutions own 41 million shares, yep, okay. So this kind of confirms it's at an all-time high right here. Institutions do own record levels. Bamco increased, Price T. Rowe increased, Grandeur Peak increased, John Cordell increased. Okay. So, yes, this is a large institutions over 100% own. All right, and they're forecasting low growth, but we'll see. I mean, look at these sales, just so nice. So they had 842 million in sales for 2022. So if we do 842 million divided by 4 quarters, 210 million a quarter. This quarter this year they did 203. If they compare that to last year though, that's so significantly higher than previous. And then it looks like the next quarter is a little bit stronger historically. Okay, so I like this one. I like this one. They should have earnings soon. They should have earnings soon. Announcing, no. So I like this one long term. I would consider getting a position here once things start reversing. Money flow is going back up, which is great. RSI is still a little bit weak. We need a little bit more strength here, but again, um, so we're going to watch RSI and MFI and RMI. Cool, good stock. Let's go on to the next one. ZFOX. What's going on with ZFOX? Oh, it IPO'd and has done horribly. Well, I think there's a reason for that. They make 149 million, but they lose 750 million. Ouch. Okay, so let's just look. Sales doubled. Um, I mean, God, this is just not a good. This is rough. Let's go down and look. So, I mean, their revenue is growing nicely. This is gonna be a really good underdog story, but not anytime soon, man. Good cash. Total assets 766, total liabilities 278. Total debt 173 million. God. Minus 7. Yeah. Operating income is 7 negative 767 million. Oh my gosh. Jeez Louise. Horrible. Okay, the stock is trading around $1, which is good, but just such a it's gonna be a rough climb. They need some big contracts. ZFOX. Institutions own 55%. That's old data. I'm gonna guess around then or less, probably, maybe more. I don't know. Okay, so they're so new, I forget that they don't have any data in Fintel. Uh Man, it's reversing, but the fact that they lose 750 million. Barbara Stewart adds to ZeroFox Holdings. I mean, ouch. Gross profit. I mean, their margins 35%. They, I mean, are they even paying off their debt? How's that going? Total debt. I mean, if they are paying it off, they're not making a dent because they're getting into more debt. So, man, this is a tough one. I really want to like this one, but just not looking good. So we're going to pass. ACIW. All right. The overall trend is heading down. Momentum, not that good. Strength is okay. Money flow is 50-50. Um, this is trading at 2018 levels. I mean, their sales are barely making considerable moves. EPS is getting stronger. ACI is first provider on board with FedNow payments. Oof. So there might be some excitement there, but honestly, this is not looking good trend-wise. Oh, nice. People happened to buy before the announcement. Doesn't sound corrupt at all. Okay. Total revenue is kind of flattish. I mean, let's see when yeah, they're not doing as well as they were last year at the first quarter. Uh Total assets 3 bill, total liabilities about 2 bill, total debt 1 bill. Their debt's been around this area for like 4 years now. No, I'm sorry, that was quarterly. Total debt. Oh no, they're paying off their debt, but very slowly, very slowly. And they increased their debt from last year, so it's kind of a wash. I mean, it's a transaction system. Net income is okay. I mean, net income is gonna surpass this year. What do I need to see here? What are institutions doing? Okay, so this is a ACIW over 100%. I'm guessing. Let's see. It might. Why isn't it finding it? Is it under something else? Let's see if this works. Um, okay, so let's disable this really quick. Okay, so we've disabled. Let's see if that fixes it. It does not, so that's annoying. What if I just go down to here? Okay, so there's ACI worldwide. Doesn't exist. Doesn't exist. I wonder if it changed its name? I don't know. Transaction systems architects. Okay, maybe that's why. Okay, this is quite a bit. So we're gonna just we'll skip that part, but in terms of like chart and overall where we're at, this one could be interesting. Um, I don't think I need to run the sales here. Um, I would like to see how much institutions own though. It is getting ready for a reversal. And I say that because there's been a lot of accumulation down here. We do see some nice green candles. I would just put this one on a watch list. I would just watch this. Just watch. Yeah. Needs to reverse. Okay. I feel good about that. Let's move on to the next one. All right, it looks like it just bottomed. Organon, 5% dividend stock. Ooh, sales are going down. Not good. Is it worth $22. That's what I need to find out right now. So they make 6,140,000,000. Good for them. They are making 746 million profits, net income. And the market cap is 5,590,000,000. Good for them. Let's add cash, remove debt. Plus 706. Whoops. Minus 70. This is USD. Okay, so I added 70 and I removed 70, just so you guys know. So I'm gonna do plus $706 million minus total debt of 8 billion. Oh my God. 8,913,000,000. Wow, did not expect that. They're paying it off though. It looks like they paid off about 220 million. Wow. Woo, that's quite large. Then we're going to divide by 254,220,000. So this is a $16 stock trading at $22. Sales are at 6.17 billion. I would take a risk on this one, honestly. Okay, OGN. Come on. OGN. I'm gonna say, I mean, it's worth taking a risk on at these prices because it looks like a pretty solid bottom. But I mean, look here, it kind of did the same thing. Like, oh, we hit a bottom, and then it was like bloop. Oh, we hit a bottom. Bloop. So let's see what institutions are doing. Institutions own 90%. Old data shows 78. So that's good. Institutions are loading up. Sales, it's at 6.17 billion. Is that, let's see. So trailing 12 months. So we're only 7 months into the year. We have about 3 months left by the time you guys see this. So net income, very nice. 177. I mean, compared to last year, we're down. So year over year, we're down. 2022. So I mean, they're going down. Like, why are they going down? We don't see any insider buying, which does not help us feel comfortable, in my opinion. Uh, so again, I think you have to be familiar with the products here to feel comfortable owning this stock. Again, EPS going the wrong way, sales going the wrong way, shares outstanding is fine. I think fair price is around $16. I mean, if we just draw some quick lines. Yeah, I could see this going back to like 26, but it doesn't deserve to be 26. So OGN, we're gonna look back at you in 6 months. OGN, let's do Feb 2024. Okay, let's move on to CVS. All right, CVS, this one is very popular. This is Walgreens Boots Alliance. No, it's not. I lied. Okay, so a lot to take in here. This has been a monster. Wow, since 1983, it was as low as 249. All right, very cool. Um, Kind of makes it look like it did a bottom here, which would be good. Momentum is turning, money flow is going up, strength is increasing. Okay, so I need to figure out what the fair price of the stock is. Look at the sales. Sales are consistently moving up. EPS is kind of confused. It was going up and then just went bloop. So let's figure out the fair share price before we kind of see if it's good. Everything's in billions, thank goodness. So 330.92 plus 3.97 billion plus 95.42 billion market cap. Let's add cash, remove debt. Cash, they have 12 billion plus 12 billion 945. Total debt, probably several hundred billion. Nope, 52 billion. 52.254 billion. Okay, and then divided by 1.28. $300 stock. That's insane. I mean, I'm going to say institutions own more than 80%. Going out on a limb here, I'm going to say institutions own more than 80%. Putting myself on the line. Let's see. Let's see. Look at the amount of ads on this website. Jesus. CVS, are you there? All right. They own 91%. 91. Let's just look at the overall chart right here. There used to be a time where they had a bunch, and then now it's kind of tapering. All right, that's not bad, honestly. CVS, I would think is a fine long-term hold and buy. It's kind of like a cup and handle right here almost, you know? Like here's our cup, here's our handle. Ooh, let's calculate for that. The right side of the cup did not eclipse the left side, so I'm a little skeptical, but let's just do it for fun. So we have, let's say 110 minus the low of the cup, which is low 51. Okay, 110 minus 51. So 59 plus 110. So $169 price target. So I like this one, honestly. So the fair share of this was like 305. CVS, fair one, 305. Current 75. Cup and handle 169. Inst big ads. All right, I could see myself buying this one long term. Maybe somewhere boring like my Roth IRA. Good to know there. All right, I think we're in the healthcare area now. Yeah. So CVS was healthcare number one. This is healthcare number two. Ooh, very nice chart overall. Very bearish candle right here though for the month. It looks like it is ready to plop on down, but look at everything else. Everything else looks like it's ready to rip up. So the question I want to ask myself is, okay, does this current price make sense? Yes or no? But also look at the lines do not lie. And I mean, we have a lot of support like right here. So you can probably get this again at 270. Oh, it's a cup. It's a head and shoulders. Look at this. Look at this. Oh my goodness. Oh my goodness. This is bearish. That's the head. Oh. So we have left shoulder, right shoulder, and then wow. Look at this. Okay, so I'm gonna say institutions are selling. Let's just check that. Institutions own 98%. I'm gonna say it's less. They own 113%. I stand corrected. It's just such a bearish setup. It's so bearish. That's so bearish. And the neckline is literally like it has to break this. This is like the neckline. Oh my gosh. Do I want to short that? I don't short, but do I buy puts? I don't even know if I would want to do that. Look at the sales in billions. Like they're already at 32 billion in sales. So, I mean, what could happen? What could happen is this is the beginning of a right shoulder that goes up and onward. So, man, it just looks so bearish to me. Let's just calculate the stock price on this. Damn it, the income's at millions. Okay. So we'll do 32 billion, correct, plus 855 million in revenue or income, good for them, plus 17 billion 500 million in market cap. We're going to add cash, remove debt, please be healthy, plus 4 billion 006. Yep, that's right. Debt, not bad. Only 2 billion in debt. 413. Wow, this is actually much more healthier than I thought. This is divided by 57,650. $907 stock. That's insane. That is insane. Wow. So I would want to watch this one going into August and seeing how it if it can break the 320 level, that would be good. Um okay, this is just insane. MOH MOH. Why does it keep doing this? MOH. Wow, fair 900. Current 300 cup, or it's not cup and handle, it's head and shoulders on monthly. Huge breakout or huge collapse. There's no in between. Wow. Okay. So again, we're just gonna watch this one. I would I would buy this. Let's look at the weekly. I think I would buy this for sure. I mean, the monthly's even or the weekly's even turning up nicely. So maybe even next week I could buy this one. Yeah, I'd consider it for sure. All right, very interesting. UNH, this one's insane. I mean, the stock went from pennies back in the 90s. Oh, earlier, 85. Yeah, 27 cents. Wow, look at our let's reset it. The I mean, it looks like it's getting ready to return to turn. Let's crunch the numbers on this. Everything's man, the shares float is not in the billion. Wow, look at the sales. Beautiful. Look at the EPS. Wow. This is truly beautiful. This is truly beautiful. Okay. So they do 348 billion, 510 million in sales. That is so crazy. Plus they have income of 21 billion, 110 million. 21 billion, 110 million, correct. Plus market cap of 466 billion, 110 million. Holy moly. Okay. Wow, almost $1 trillion all around. All right, let's add cash, remove debt. Total cash 23 billion. Plus 23 billion, 365 million. Correct. Minus probably some big debts here. Total debt 57 billion, not that bad. 57 billion, 623 million. Yep. And we're going to divide this by 928 million, 430 million. Oh, wait, this is millions, not billions. Yep. Share price of $863. Wow, wow, wow. And for the year, it hasn't even done anything, meaning this, all of this is accumulation. Wow. Wow, wow, wow. Very nice. UNH. Fair 863. Current 5 something. 550. I don't know. 502. Institutions are probably loading this hand over fist. Let's see. The oldest data shows 89% ownership. I'm going to say way over. 106. Wow. I want to see the graph. Yeah. All-time highs right here. All right, that was awesome. I feel good. I feel like I found a good one. This is something I want to put in my Roth IRA for sure. Last time it accumulated for a while, it went on a huge run. So just amazing. Okay. Honeywell. Let's see what's going on here. Hasn't done much for the year. It's kind of in accumulation mode. Nothing really going on. Kind of looks like it's petering off. Um, Sales are going down. EPS is going down overall. Showing that's a little overvalued. Man, it's been a juggernaut. I think it needs to go down a little more. Let's check back on Honeywell next year. Let's do HON Feb 2024. Valmont Industries. All right. Just it's going down. Look at the MACD here, it's going down. So this is gonna keep going down. It's a conglomerate of what? What do they own? Sells materials in the US, Australia, Brazil, Denmark, infrastructure and agriculture, pre-stressed concrete, lighting, transportation, whatever. Okay. I mean, revenues are organically, naturally going up. Net income is also going up. I mean, everything's going up. It's just the technicals are moving down. So it's probably over. I mean, it doesn't look overpriced. It really does not look overpriced. Let's run the numbers here. 4,430,000,000 in sales, good for them. Plus 263,110 or 1,000, correct. Market cap is plus 5,560,000,000. Yep. All right. Add cash, remove debt. They have 185 million in cash, which is historically very low. Plus 185 million, 410,000, correct. Minus 877,980,000 in debt. Not bad. Okay. Yeah, this is very divided by 20 million, 69,000. $462 stock price, trading at 262. So almost a 100% return there. I think institutions are probably loading this one, if I'm not mistaken. I mean, that just seems very undervalued. And I mean, the sales are just ramping up. Sales are ramping up. They're barely paying off the debt. They don't have too much debt. How much debt? I mean, let's see their total debt. They've been in worse debt before. Okay, they've been in worse debt. Institutions own 105 million. Not bad. I mean, this is fine, honestly. I like this one. We are seeing a bear. This is a bearish chart though, because this is engulfing on the monthly. So this candle, it eats the candle before it. So we're actually gonna wait for this one until we get it probably around here. 218. If it doesn't move, there's really good support right there. So if it fails the 263 level, which what's the current price right now? It's at 262. So if it on Monday the 31st, July 31st, if this does not close above that, we could likely see go to 218. So I'm just going to note that. All right. Moving on, moving on. IFF. Ooh, look at this one. What is this? Specialty chemicals, fragrances. Oof. Oof. Just a big, okay. So, okay. Very sharp decline here. Sales are continuing to go up. Earnings per share is going down though. So, I want to know if this is priced right. So they make 12 billion 240 million. Good for them. They're losing 2 billion 121 million. Not good. But they have 21 billion 610 million in market cap. Good for them. Okay, we're gonna add cash, remove debt. Ooh, total cash is 483 million. Historically, not bad. Plus $483 million. Cash, total debt, probably nasty. 10 billion, yeah. Minus 10 billion 987 million. All right. And we're gonna divide this by 254 million 530,000. Right there. $83 stock trading at $85. We're not missing much here, honestly. It's still trying to find its groove. It'll probably come down to the 365 SMA, which I would think would be bullish. I would like to see some institutions adding here, but not a lot. Because I want to see this kind of do a little round right off of the 300. This blue line right here is 365 SMA. So I want to see this come and do like a whoop, like that. Institutions own 100%. All right, historically at normal levels. It's about 7% more than what FinViz is showing as of the old data. So again, IFF, we're gonna just watch for IFF. Watch for 365 SMA. Curl. Okay. All right. Let's move on to the next one. FMC. A lot of interest right here. A lot of interest by people who want to buy agricultural. I mean, it's overall like this chart is beautiful. Last time the stock touched the Bollinger Band was at $61 and then went all the way to 140. Touch the Bollinger Band right here. Is it going to go to 180? Let's find out. It's showing it's undervalued. Sales are stair-stepping insanely. Earnings per share is going the right way. I think we found a keeper here, you guys. So we're going to take 5,800 million in sales. Congrats for them. Plus 817 mil income. Great. That's super awesome. Plus 12,110 million. Yep. And let's add cash, remove debt. Total cash is 572 million. Wow. Wait, is this USD? Yes. Plus 572 million. Yep. Total debt, give us some billions in debt. 3 billion, not too bad. Minus 3 billion, 274 million. All right. And total debt historically is around this area. Yeah, okay. Total cash, all-time high. Good for them. That's awesome. Total revenues just organically moving up. Cost of revenue organically moving up. Gross profits organically moving up. That means net income is going to organically move up. Okay. President and CEO just bought at $115. He bought $476,000 worth. Good for him. Quite a bit. We have some options things going on, so that cancels out. Bye for Nicholas. I don't know what you're doing. Okay, so we don't have the CEO swing trading the stock, which is good as well. So we have our numbers here, and we're going to divide it by 124 million. $129 stock price trading at 96. This is a buy. This is a good one. This is FMC. Or let's do fair. 120. And it's going to go up. Fair 129, current 96. Yeah, I mean, are the institutions buying this one? That's a question. Let's see. I'm gonna say they are buying. Like this is 100% ownership. New data, old data is 92. They are buying. All right, historically in line with that. So, yeah, I really like this one. Let me just do some quick. So ones that I like a lot so far, I do want to do something special like Control B, Control B. CVS, sure. Control B. Yes. FMC, big yes. Whoops. Control B. Yeah. Huge sales EPS. Not even accounted for. Huge inst buy. Okay. Awesome. Let's move on to the next one. Alcoa. Oof. All right. One, two, three. A, B, C. Okay, so this one's following the Elliott wave pattern. So watch me. So here's one, two, three. A, B, C. So it's this is third leg is the highest the stock will go, and then it's gonna get a dead cat fake out, come down here. It's gonna have a lower high as well. Just overall, look at the RMI. So overall, it's gonna keep going down in my opinion. Where we could see leveling off is right here. So this needs to fall a little bit more, and it will be a good cup and handle. So here we go. This is all in line. So what's going to happen? This is all speculation. All speculation, putting that out here now. So we have a left cup height of 52. Let's call it 52. A right cup high of 95. 95 plus 52 divided by 2. Dang it. 95 plus 52 divided by 2. So 73.5 is the cup average height. Where's my brush? So here's our cup. We can probably get this for around 20 bucks, whatever. So the low of the cup is 469. So we're going to take this minus 4.69, the low of the cup, 68.81. We're now going to add this to the height of the cup, which was 73. This is a $141 stock if this touches over here. So remember 141. I'm just going to take a note. 141 if C and H plays out. Okay, how are we going to determine if the cup and handle plays out? We're going to look at manipulation in terms of institutional ownership. We're also going to do my price action calculation, my price stock calculation. So we're going to go through the motions here. The company makes 10,870 million. Good for them. They're losing 1,400,740 million. Okay. They do have 6,070 million in market cap. Cool. And we're going to add cash, remove debt. Wow, they have $1 billion in cash. Good for them. Plus 1,363 million. Right there. And total minus total debt of 1,807 million. Yep. Okay, and we're going to take this divided by 177 to 6. $84 stock trading at this price, but what's going to bring them up and out of this pattern is the sales. Right here and EPS. Right now they're at 10 billion in sales. Let's go down here. So, okay, they've reported 2 quarters so far. They're doing 2.6 billion a quarter. So if we do 2.6 billion times 4 quarters, That's 10.4. That's quite low compared to last year. Yeah, so their sales are going to go down from 12.45 to down to 10.6 or 10.4. So we're going to wait for this one. I can add an alert here, can't I? Can I add an alert? Can I add an alert? Add a note? No. Create alert. Ticker AA, price below, oh God, what was it? 25. Okay, cool. That's cool. All right. So I was gonna look at ETFs, but I just went through a whole bunch of stocks and we're at about 50 minutes. So if you guys made it this far, I appreciate you for watching. I hope you maybe found something great. Maybe you want to take a look at some other stocks. But if you made it this far, please consider subscribing. I hope you're doing well. Hit the like button. I'll talk to you later.